Hi, I'm Nussbaumer from Macrobeat.co.uk. Well, on the hottest day possibly on record in the UK, we have possibly as well, the market heating up with today's ECB meeting, which is obviously the big story of this week. A lot has been written and said about it. A lot of forward guidance is going to be expected today. Core views are still for 10 basis points cut in September, 10 basis points in December, possible restart of QE towards year end. Now, the big question is just whether or not the ECB, after recent weaker European data, wants to be a little bit proactive and already cut rates by 10 basis points today, which obviously would be a small surprise, but in essence, it really isn't. So the question is, does the ECB have something in store that they can use in a sort of bazooka style, or is it just going to be more of the same of what we know? So we will know more in about 2 hours' time. On the back, obviously, next week we're going to have the Federal Reserve, which we talked about last week, 25 basis points fully priced by now, while some people, me included, are still actually leaning towards a 50 basis points cut. If you look at what's going on in the global growth story, there is just no point for the Fed to wait for the US data to turn. It will make a lot more sense for the Fed to actually get ahead of the curve, even with a possible 50 basis points cut. If you look at all the European PMIs from this week, German data, it's just a question of time until some of that weakness is going to hit the US as well. This is really from the bigger story. So ECB and Fed are the stories leading us into, the summer market, or, everyone is sort of breaking up. And so the tone could be set. Personally, I still think that the Federal Reserve story will be the biggest story of the next sort of 1 week. I still think the Federal Reserve story is the one that will probably accompany us for the rest of 2019. But we have the little disruptor of the ECB today. And for that, we're going to have a quick look into the chart. So the first slide we have is the PMI that we have. We can see a small recovery in the US PMI. We see a pickup in the Japanese PMI, while the European and Chinese PMIs are still heading lower. All in all, it's still all hovering around near the 50 mark. So it's definitely not too comfortable in terms of where global growth is going. Overall, we just see a general weakness in there. To the next slide, we see the euro dollar. The euro dollar has started to weaken again after initial sort of rally higher on the back of all the Fed easing hopes. But right now the market is fully focused on what the ECB might have in store. We're trading near the 2019 lows, and obviously if the ECB really manages to extend expectations today, there is obviously a chance that we might break the 111 and head to new lows for 2019, which the next level I see is around 110.65. Personally, I don't think these are levels to sell euro dollar no matter what the ECB is going to be doing. I still think the Fed is the biggest story, and if you start selling euros down there, I'm not sure you're going to really get happy. On the next slide, we have the dollar index, obviously the same sort of picture after the initial weakness that we have seen, where we moved down to 96.60. We have now this push higher again, reaching the June highs. And, again, depending on the ECB today, maybe there's a little bit more upside, but it's on thin ice personally. The next slide, we have dollar yen. Dollar yen isn't really doing that much. We obviously haven't managed to break the 107 area. We still trade around these sort of mid-Bollinger Bands at 108.50. Not really moving too much. It feels we have a lot of exporters on the way up. And this pair is still the one that might be actually the easiest one to trade into the Federal Reserve, being short dollar yen into the FOMC next week, where either we're going to get a 50 basis point cut and the dollar is going to weaken, or if the market doesn't or isn't impressed by the Federal Reserve, we could see a rather bigger move down on equities, which again will put upside pressure on the yen. So either or, I could see dollar yen go down for actually both scenarios. Last chart would be gold. That one is still holding out, still on elevated levels. It's obviously waiting for the ECB, waiting for the Federal Reserve next week, and that really has to produce in order to sustain the big rally we have seen. So this is it for me, really. ECB this afternoon, Federal Reserve next week. I wish you a good day. Thank you very much indeed.